Charting Your Way to Wealth, Chapter 8, Candlesticks for Visualizing Price Movement. Candlesticks offer traders a visual method for charting price movement. This indicator was developed in the 1800s by Japanese rice traders. The reason the method is called candlesticks is because the graphical representation of price movement looks like a candlestick. The candlestick can have a wick protruding from its top and/or its bottom. Candlestick principles, patterns, and theories are endless and fascinating. First and foremost, candlesticks focus on price action and movement, not on why the price of the underlying asset or equity is changing. Price is always deemed to reflect all known information, as well as the emotions, that is the fear and greed, and the expectations of the buyers and sellers in the marketplace. Although we use a modified form of candlesticks that we will later discuss, it is first necessary to explain the traditional candlestick method. A specific time frame is reflected by each candlestick with the opening price, highest price during the time frame, as well as the lowest and closing prices. Wicks, also known as tails or shadows, reflect highs and lows outside the opening or closing prices during the specific time period. Candlesticks offer both visual appeal and ease of interpretation. They're much simpler to follow than bar charts and other plot styles because traders can see information in a flow of price changes. Buying pressure is indicated by hollow candlesticks, particularly green ones. Selling pressure is demonstrated by filled candlesticks, particularly red ones. Long candlestick bodies show greater buying, that is green, or selling, that is red, pressure. Wicks represent highs on the top of the candlestick and lows on the bottom of the candlestick. When a long wick exists above the candlestick and a short or no wick is below the candlestick, we know that the buyers dominated the time frame represented by the candlestick. Conversely, we know that sellers dominated the session when a long wick extends at the bottom of the candle and a small or no wick sticks out of the top of the candlestick. Short candlesticks with long upper and lower wicks are called spinning tops and indicate uncertainty because both sides were able to drive the price back and forth. A doji is an extreme form of a spinning top where the opening and closing price are the same. A doji represents significant price indecision in the marketplace. With traditional candlesticks, you can study and memorize dozens of patterns, but these patterns are not the key to successful charting. We use all the tools in our toolkit. Candlesticks are just one of several indicators. Over time, we have become very impressed with the simplicity and helpfulness of a specific candlestick technique known as Heikin Ashi. Translated from the Japanese, Heikin Ashi means average pace. We use this technique instead of regular candlesticks because it helps us better isolate trends and follow price movements. Plus, it's very easy to learn and requires no memorization of complicated patterns that may or may not predict future price movement. The technique works best when used with the price percent oscillator, derivative oscillator, trend lines, and Bollinger Bands. While standard candlesticks are calculated as a series of open, high, low, close, that's OHCL for each time period, Heikin Ashi candlesticks are calculated much differently. Opening price of the previous bar, plus the closing price of the previous bar, divided by 2. High, maximum price in the period. Low, lowest price in the period. Closing price, opening price plus highest price plus lowest price plus closing price divided by 4. Do not worry about the mathematical formula. Any good charting platform provides Heikin Ashi candlesticks as an alternative to standard candlesticks. Heikin Ashi candlesticks are interpreted in much the same way as standard candlesticks. Downward price movement during time periods is shown as filled red candles. Upward price movement during time periods is represented by open green candles. With Heikin Ashi candlesticks, there are a few primary signals. These are easily explained and understood. An open green box candle with no lower wick demonstrates a strong uptrend. In other words, the trader should stay long. That is, remain in a position or a call option. A hollow green candle by itself signifies an uptrend, meaning exit a short position or add to a long position. A filled red candle with no upper wick demonstrates a strong downtrend. This means the trader should stay short, that is, remain in an inverse fund or put option. A simple filled red candle indicates a downtrend, meaning add to any down position or get out of any long position. A small candle body surrounded by upper and lower wicks indicates indecision in the marketplace and a possible trend change. Indecision and uncertainty mean watch out. Here's a simple formula for you to employ. 1. Open box, uptrend, stay in your trade. 2. Open box with an upper wick and no lower wick. Strong trend, keep riding it. 3. Small candle with upper and lower wicks. This is called a spinning top. It indicates indecision in the marketplace. Watch out because a trend change could happen. 4. Candle is a line. Same opening and closing price with upper and lower wicks. This is called a doji. It indicates extreme indecision in the marketplace. Watch out because a trend change could be about to happen. 5. Closed filled box indicates a downtrend. Stay short. 6. Closed filled box with a lower wick shows a strong downtrend. Stay short until there's a change in the trend. Standard candlestick charting can be complicated and may produce numerous false signals. Heikin Ashi candlesticks have the ability to identify trends because of the unique way the average pace candlesticks are calculated. When used properly, false signals are much less likely to be encountered. This alternative to standard candlesticks allows a trader to more easily spot trends and not be confused by charting noise. With practice and when used in conjunction with our other indicators, Heikin Ashi candlesticks can help a trader spot new or reestablishing trends or more easily recognize trend changes or reversals. Here at Charting Wealth, we're always ready to help. Follow us at chartingwealth.com.